Hi back everyone. Today we're going to continue with the stuff that we had before about market cycle. Last time we talked about different kinds of market cycle here. So if we go over the material, so we had this clock which was representing the slopes and momentum on the chart. And here, if you look at it, let me go to the next slide here. Okay, so we started from the wide channel. So we had this range one in the range phase and range cycle. We buy low and sell high. And in this wide uptrend or wide downtrend, so we usually try to follow the trend. And in uptrend, we usually buy low. Sometimes we sell high. Okay. And in downtrend, we sell high and sometimes we buy low. Okay. In the other phase, which is normal channel phase, the previous one was weaker. This is a little stronger. So, I mean, momentum wise, so this one is stronger. So, a normal uptrend, we buy low. Okay, we wait for the price to come back and retest the area. And we buy low. So here we buy here, there, and so on. But in downtrend, normal downtrend channel, we sell high. We don't have sometimes buying low. So here we just buy, and uh, it could be just pullbacks, or could be, based on the candles or based on uh, I mean, moving average or whatsoever. You just try to buy. So, and in a spike phase, you just look for any reason to buy. It doesn't matter if you buy in the close of the candle, low of the candle, high of the candle. For any reason you buy here, and for any reason you sell in the downtrend spike. Okay, now that market cycle, we're gonna just go on to transition between market cycle. But before we do that, we need to know a very critical idea. So how to just identify market cycles and their transition. So to know that, you need to learn about, uh, let's say, you need to learn about what the pullback is. Okay, so in candle scale. So I'm going to teach you some way to identify pullbacks, and later we're going to work with these pullbacks and different kinds of the swings and legs that we had talked about in the previous lessons. So here, if you start from the first candle on the chart, so look here, we have the high of this candle, which is a bearish candle. The second candle's high is lower than the previous ones. And this continues on third candle. In third candle, we have the sequence like a stair. And on fourth one, the same stuff. But now look at this one. Here we have break of high. So this means that this leg is done and we have a pullback here. So it means that now that our pullback is started and we have uptrend, actually up break of the high, we start to just compare the lows of the candles. Okay, when it is downtrend and we don't have any up break, we're just comparing on bearish candles, we're comparing high of the candles. Now that we have a break of it, we're going to compare low of the candles. If we have break of high, we're going to compare lows. If we have break of lows, we're going to compare highs. Now, as you see here, in the very first candle, we have another break. Okay, now it is we have to just again start to compare highs of the candles one after another. So immediately, this is the high of the candle that we're going to compare. Again, it goes on and on. Here again, we have a breakout high. So immediately as we have this break, it doesn't matter if it is the break the break is by candle close or shadow, even when this candle is light. So you have to compare low of the candles anymore. So after this break, we're going to compare lows of the candle. So here is the end of pullback. So as you see here, pullbacks are short-lived. So here, look, 1, 2, 3, 4, and we have 4 bearish candle and 1 small candle scale pullback. Again, 1, 2, 3, 4, 5, and 1, 2, 3 pullback. 3 candle pullback. So here we have the break of this candle. Now it is time to compare highs of these candles. Okay, it continues till here. Now high of the candle is broken. Again, we're going to compare lows of this. Okay, here again broken, but this time is low of the candle is broken, so we're going to compare highs of this candle. So immediately we have another break, so then we're going to compare lows of the candle here. So this is the way that we're defining these pullbacks mechanically based on candle pullbacks. So if we want to just talk about the legs and slopes here. So when we have high of the previous candle is higher than the high of this candle, so we're looking for sell, right? So we're happy to sell. But if we have this upward momentum, I mean that uptrend, we have to buy. Okay, this is something so logical. So here, if you buy, you're going to be happy. And if it is downtrend and we have downslope, we're going to be happy to sell. But what about opposite scenario? If we have actually green arrow, we expect it to go up. But if it goes down, so we're going to stop and we don't get on this. Okay. So here again, if we have the opposite idea, we're expecting a red arrow to come down like this one, and the green one goes up. So here, have a look at this one. Second one, we're still just bearish, we're selling. Here, still we're selling. Now here, we expect to sell, but look at this one. This represents this third one, right? So we stop here, we don't buy or we don't do anything, okay? So, and even if we want to do anything special, we're gonna just sell, nothing else. So then we're gonna stop. Here, again, the second scenario is happening. Okay, this is pullback phase. So we're not going to buy, right? We're not going to buy here at all. So again, this continues like this. Now we have a red arrow, but the slope is up. Red arrow slope is up. So now, sorry, here we have green arrow slope is up, but because it is short-lived, we don't do anything. But if we go inside this candle, so I mean lower time frame, you're going to see it on the other slides. So we can buy, but it is short-lived and it is low probability. So we decide to wait here. That's our buy. So again, we have this short-lived pullback. It goes up, and this is end of pullback. Here it was the end of pullback. Here's end of pullback, which is so critical to know. So again, downward slope starts. It goes on. Here we have green arrow, downward slope again. But this one, so when we have highs of the candle, they're connected. So we need a red arrow. Okay. But when the red arrow's slope is positive, bullish, so this contradicts. Okay. Here we have red arrow, but it is uptrend. So we can't take any trade here. So we're going to wait till, yes, green arrow appears here like this one. Okay. Now, if you look at the highs and lows, okay, this phase is pullback, this phase is pullback, this phase is pullback, this phase is pullback, and this phase is pullback, which turns out to become a reversal leg. So here we have a pullback, and the pullback here happens again. Not only it is pullback, but this one is valid low. Why is it valid low? Because the breakout the high is by candle close. Okay, here the breakout the high was with shadow. Okay, now this is not only pullback, started the pullback, but also a valid low. Here we have end of pullback in this area, and because the close of the candle broke previous candle low, it is valid high. Now again pullback, the same scenario, because we have break at the shadow using this candle close. So here again valid high, pullback end. So why valid high? Because the close of the candle broke the low. Okay, here again pullback starts, and we have valid high, valid low, sorry, because the high of the candle is broken by close of the bullish candle. So look at this one now. Here I'm going forward and backward. Look what happens inside these candles in the lower time frame. So the previous, this one is 15-minute candle. These are 15-minute time frame. These are all 15-minute candles. These are 1-minute candles. So look at the opportunities that we have here to sell all the time. Okay, as far as our momentum, so is intact and strong, so we can sell here in any opportunity that we get. Now, if we get here, if we want to just draw Gantt swing legs here, Gantt swings are so sensitive to any move in the candle face. Okay, so I mean that any ups and down, it doesn't matter if it is a shadow or close the candle. So Gantt just detects it, and just you can plot it on the chart. And here, this one, look at the difference between the previous and this one. This one is not Gantt swing. These are based on valid high and valid low. Okay, so this takes these are less sensitive, I mean, but it takes the noise out of the market. If you have a lot of noise in the market, so you're gonna get confused. Sometimes you see, as in this part, so we don't have any difference between the Gantt swing and a valid pullback, Gantt swing, a valid pullback. So we have overlapping of some of these areas. So that's beauty of it. Now, here, if we just plot moving average here, high of moving average 9 and low of moving average low. So even if with this simple moving average, you could just identify potential areas to sell. Okay, in almost in this touch of the moving average. But if the market structure is market cycle and structure is not trendy like this one, this moving average is going to be something that it's turning out to be a losing machine rather than lucrative way of actually trading. So the first step to identify your actually in the strategy that you want to just identify buying or selling place is identifying the momentum of the leg that you are in. So here, so when you identify this momentum is high downtrend, so you're gonna go to the lower time frame. So you're gonna find again pullbacks there and other pullbacks. So here, and you're looking for sell based on those high and lows of the lower time frame. So if you look at this one on the other one, okay, look here we have these areas. These are the end of pullback. Yeah, these parts are the end of pullback based on the thing we learned. So here we're going to look for opportunities to sell in overbought areas. So here, so you have learned how to identify overbought areas in the previous lessons. So here again, this is the end of pullback. So you can sell in here, start selling till it gets to the end of starts another pullback, and if you add in, or you can trail your stop here, and it goes like this one. So in the next session, we're going to talk about why your stop gets hit easily, but your target doesn't get filled. So this is the reason is that you cannot do one strategy. You cannot use one strategy for different kinds of market cycle phases. So each phase has its own kind of strategy. It doesn't matter if it is based on the candle entries, or if it is based on supply and demand, or even if you're using indicators. The first thing that you have to consider is market cycle. Market cycle was combination of market structure and momentum. So if you don't consider these two, you're doomed to be a losing trader. So unless you consider this ideas, you cannot trade well. So in the next session, I'm going to talk about, give you one example, another example of this kind of market cycle, which is different. It is not trendy. It's going to be a little bit choppier and sideways. You will see that, and I'll give you some examples that you'll see that you cannot apply one method on all different, different and different places of the chart and market cycle. So if you do so, you'll see that your stop will get filled easily rather than your target. So see you next time. Take care.